Hello, everyone. Today is June 29th, 2026. Welcome to our weekly financial review. Over the past week, global financial markets experienced a mix of headwinds and tailwinds. While policy support gained significant momentum in the Chinese market, hawkish signals from overseas continued to keep investors on edge. Let's dive into the core highlights. We begin with the Chinese market, where the high-profile Lujiazui Forum took center stage. Major financial reforms were rolled out across China's capital markets. The People's Bank of China outlined plans to optimize short-term interest rate management and introduced a new RMB repo facility for foreign central banks. Simultaneously, the China Securities Regulatory Commission unveiled comprehensive market reforms, expanding the STAR market's listing channels for hard tech enterprises, particularly AI companies, while actively channeling long-term institutional funds into the equity market. On the macroeconomic front, domestic demand stimulus intensified. China's National Development and Reform Commission allocated over 60 billion yuan in new subsidies for consumer goods trade-ins. This brings the Chinese market's total annual funding for equipment upgrades and consumer subsidies to 2,000 billion yuan. Driven by these initiatives, the semiconductor and AI hardware sectors saw a strong influx of capital last week. Turning overseas, the biggest variable remained the Federal Reserve. At its latest policy meeting, the Fed held interest rates steady, but delivered a surprisingly hawkish pivot. The updated dot plot significantly raised the year-end median rate projection, with 9 officials signaling the potential for further rate hikes in 2026 due to persistent inflation. Consequently, the US dollar index surged and Treasury yields spiked, putting pressure on global growth and tech valuations. Currency markets faced heavy turbulence. The Japanese yen tumbled to a near 40-year low in the 161 range against the dollar, prompting warnings of direct intervention from Japan's finance minister. The offshore RMB also faced temporary pressure, hitting a multi-week low. In commodities, Brent crude plunged nearly 8% in a highly volatile week, weighed down by shifting geopolitical dynamics. Gold prices dipped under the pressure of the hawkish Fed, but held steady near long-term highs. Notably, strategic metals like copper and rare earths showed strong resilience, backed by robust demand from AI computing and the green energy transition. In summary, the global market is navigating a clear structural division: strong policy flooring in the Chinese market versus tighter liquidity conditions overseas. In the coming week, global eyes will turn to the upcoming PMI releases and employment reports. Thank you for watching. See you next week.